Hello traders, welcome to the Daily Technical Forex Report for the 19th of November. My name is Andrei Lishanetsky. I'm a technical analyst at rforex.com, and as usual we start our forecast with the Euro-USD currency pair. The price showed an abrupt growth on Friday. If we take a look at our volume chart with this instrument, we can note that the rise of the pair was supported by the huge volume, and now it is located a little bit below the level of resistance. It's 1.1425. Thus, we can and should consider a scenario of its breakout, which will be a great bullish signal. The breakout movement must be keen and supported by the large volume. A stop loss should be located under the breakout volume bar, and our first target is 70 pips. Our second target is 120 pips. So with the euro, long positions after the short breakout of the level of resistance. The pound. The price adjusted upwards on Friday, but the movement was smooth and on the average volume. Moreover, considering the recent sharp fall supported by the huge volume, we still should give preference to short positions. But we can enter the market only after the resumption of the confident drop and the sure breakdown of the level of support 1.2742. The breakdown movement must be supported by the large volume. A stop loss should be located above the breakdown volume bar, and the potential of the deal is more than 120 pips. So with the pound, sales after the short breakdown of the level of support. If the price goes on rising, we should stay out of the market. The yen. The pair fell down and broke down the previous level of support, which is a great bearish signal. Moreover, the downward movement was supported by the large volume, which only enhances its importance. So now we should give advantage to sales. We can enter the market after a smooth upward correction of the price in order to obtain a more profitable entry point. A stop loss should be located above the breakdown volume bar, and a potential of the deal is around 80 pips. So with the yen, sales after smooth upward correction of the price. The Canadian dollar. Nothing has changed here, as the price is still located in the local range between the level of support 1.3055 and the level of resistance 1.3258. That's why the best solution with the Canadian dollar is just to wait for the exit of the price from this consolidation. Furthermore, the breakout movement must be sharp and supported by the large volume, which will ensure us against the fake breakout and will be a more secure signal for entering the market. Until that, while the price is located inside this consolidation, we should omit this instrument from our trading plan. The Australian dollar. The price grew up and broke out the previous resistance level. Moreover, the upward movement was supported by the large volume. So given all these factors, we must give preference to long positions. We can enter the market after a smooth downward correction of the price in order to get a more profitable entry point. A stop loss should be placed below the beginning of the breakout movement, and the potential of the deal is more than 80 pips. So with the Australian dollar, long positions after smooth correction of the price down. Our last instrument for today is gold. The price also rose up. The growth was supported by the large volume, but the movement was stopped by the formation of the new resistance level. It's 1223.50, 1224.90. If we take a look at our volume chart with this instrument, we can note that this level contains large volume. Therefore, we can regard long positions only after the confident and keen breakout of this mark. The breakout movement must be supported by the large volume, which will be a more reliable signal for entering the market. A stop loss should be placed below the breakout volume bar, and our target is around 100 points. So with gold, long positions after the confident breakout of the new level of resistance. Let's take a look at the sentiment of the market. This indicator totally affirms all our trading scenarios except gold. So with this instrument, we should be more careful. As with the Canadian dollar, the situation is almost 50-50. That's why we should wait for the confident exit of the price from the range, and only after that we can deliberate new positions. For today it's all. Thank you guys for watching. Hope this forecast will be useful for you. Subscribe to our channel to stay in touch with the latest researches. Take care. Bye bye.